Hello everyone, this is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like our 21 SPY reversion and mean systems with 80 to 90% winning trades, and of course our KISS trend systems, which is a proprietary trend following system that is non-curve fit that can be applied virtually to any instrument and nothing else like it out there. It's exclusive to Breakpoint Trades. You only find it here. Again, you can actually check these by going to the systems section, going to KISS STS tables. Again, you'll see a bunch of other things here. They're all password protected. Right now, you can check the KISS systems without a membership, but this will be locked down soon. It's a good reason for you to subscribe to Breakpoint Trades if you haven't done so. So today, by the way, Tesla went long on the KISS system, and it's basically a washout condition. You can see it right here. The system has had some nice trades of Tesla this year, especially the one from the May into the June timeframe. Also, we had a DeMark 13. Anyway, let's get back to things at hand. So, last time I did a YouTube video was last Wednesday, so time to do another one, give you an update on the market. Again, this is a State of the Market Technical Analysis Review for August 21st, 2023, and this is our back-end recording, which I'm going to start right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Monday, August 21st newsletter. Tonight's newsletter, as you can see, divided into 7 major sections, and no new systems today, guys. Had some questions. We still have the 2 open reversion and mean system trades from the ES systems. No changes there. Should the market continue higher, which I think there's a good possibility, we may soon see those exit those trades. Of course, I will send out a trade notification email. And of course, regarding the KISS systems, if you haven't done so, make sure to set up your favorites so that you can automatically get email notifications right to your inbox. Okay. Again, you have to be a subscriber to be able to do that. But if you are a subscriber, make sure to do that. Today, for example, Tesla went long, first entry. So you can see the newsletter is divided into 7 major sections. I did add a few trade ideas, but not many in this environment. And as far as the market, guys, as you know, we were extremely stretched oversold coming into the day. And so logically, we put in a nice bounce. And that was despite a nice big drop in the 20-year bonds and a big rally in the 10-year treasury yield. So despite that, the market's still put in a bounce. That's a positive. Now, again, it could be totally negated if those rates just start really ramping up. But it is a good sign that we saw the market rally ahead of that. Again, we were extremely oversold. A lot of indicators were buried. NIMO, the McClellan oscillator, stuff like that. So we were due for a bounce and we got it. One option, Steve and I were talking about this, and this is just from a psychological standpoint, that would trick up a lot of the masses, where we get a further rally attempt and grinds its way higher, in that wave B, that causes eventually some panic buying near the end of that wave B rally, right? Trapping those late buyers. And then you get another decline to test the lows or slightly undercut the lows, causing those late buyers to stop out. And what do you know? Then you get your decent trade low. Okay. Something like that could easily take it, a wave B and another decline could easily last into September, would play out with seasonality pretty well. Markets like to really screw the masses, and that would be a good way. Again, that's one option. Some sort of fourth wave we think the market is in, which could be, it could be a zigzag, it could be a coil, but we'll see. As far as this week, here's the key events: existing home sales, PMI on Wednesday, new home sales on Wednesday, NVIDIA on Wednesday, guys. NVIDIA, by the way, had a great day. Initial jobless claims on Thursday. Fed Chair Powell speaks Jackson Hole on Friday. Next, talking about the open reversion to mean system. So reversion to mean, we don't have any open SPY system trades, but we have 2 of the subsystems are in second entries on ES. On the S-trap, is in a second entry still. Despite today's bounce, it did not close out. And the QE swing 3 is in a second entry. So 2 subsystems out of 21 systems have second entries. Okay. Should we get a further rally attempt, we're likely to see these exit. And again, I'll let you know via trade notification. Next, image number 3. This shows Tesla from the KISS systems from that section, and it actually went long today. You had it to mark 13. It was quite oversold, and it took a trade here. Now, what type of trade is that? That's actually one of those washout condition trades, kind of like a reversion amine that is built into the KISS systems. Most of the KISS system trades don't do that. They need a good reversal to trigger long, so this is one of those oversold. So we'll see how this one plays out. Puts a stop right at the low there. The last trade was a whipsaw. The one from May into late June was a great winner, and the one in January into February is a good winner. Next. Resize this. So item number 4 shows the index sector table, what transpired today. Again, you can see little bifurcation. The Dow and Russell were down, but strong rally in the S&P and Nasdaq. As far as the major market sectors, got a broadly 50-50 mix of up and down here. Biotech had a good day, semiconductors, technology. The bank area was weak, as well as energy a little bit, and home builders, which sold off last week. U.S. dollar down just a tad today, down 0.1%, struggling up at that resistance area. Cryptocurrencies have been, really sold off last week. We're down a little bit today. Commodities, mostly to the downside here, as you can see, exception natural gas. And what's not on here is uranium. Uranium looked really good on the weekend, Steve showed, and that had a good day today. In fact, I have the charts tonight, which I'll show. Precious metals, gold up 0.27%, silver up 2.35%. GDX actually outperformed gold. That's a slight positive. If the market does put in a further rally, I think this area has potential to do so as well. And again, market bounced today despite the good rally in the 10-year and 30-year. Next, item number 5 shows the economic news calendar. Again, I already discussed all this. And remember, we do have NVIDIA on Wednesday, Fed Chair Powell on Friday, etc. All right, guys, let's go and jump to the charts. So first chart below, item number 6 is the NYAD advanced decline, 10-day average. And again, like I said, a lot of these indicators gave great signals, warning signs back in late July. This had a nice divergence with a lower high on the NYAD versus a higher high in the S&P, and that gave a great signal. Also lined up perfectly with seasonality. Remember, we were looking for a sell-off correction starting in August, and that's exactly what happened. Market held up all through the summer, which we favored, and it's pulled back into August, which we favor. August into September is usually weak. So anyway, so these are played out. It is the NYAD did get sort of oversold down here, so everything was due for a bounce. Chart 7, here's the NYSI with a 9 EMA. This also gave a great sell signal. Obviously nowhere close to giving a buy signal, but it gave a great exit signal there in early August. Next. Chart 8, here's the BPSPX, also gave a great signal. And remember, guys, on our newsletters, if you're a subscriber, you can get the live chart URLs to these, so you can use them on your own. These are great tools that we spent years putting together. Got a whole database of them, and that's the benefit of being a subscriber to Breakpoint Trades. We give you the live chart URLs to all these systems and custom indicators like this. Next. Chart 9, let's go move to the S&P 500. This is the weekly view of the S&P. And again, as you know, S&P about a month ago stalled right at the upper channel and that resistance area that we highlighted and has sold off. Just beautiful. Again, you can see so far it's bounced a little bit off this demand zone. Another interesting thing, remember this trend line on the 14 RSI? Notice how trying to bounce off that. So definitely a very valid trend line there. Next. Chart 10, here's the weekly KISS system for the S&P. Steve showed these in the weekend, but as you know, we still had, while the dailies stopped out, the weeklies still have quite a bit of room here, 4250 on the S&P. Likely that'll hold on this correction if the market doesn't make a drastic new low on the next sell-off. And you can see the moving average ribbon is pinching on a bullish configuration. Now, what I think, or what Steve and I think, is, let's see here. Okay, so let me try that again. So what we think is, we get some sort of bounce, lower high, then down again. Hopefully that STS holds. Then we get our rally into the end of the year. So that's one option that we favor at the moment. Next, chart 11, here's the daily view of the major indexes. Again, except for the Dow and Russell, the index is bounced. You can see we're below the lower Bollinger Bands on the S&P and Nasdaq, etc. Next, chart 12, here's the Dow. The Dow did fall below that horizontal previous resistance. Didn't act as support this time. Otherwise, I added a uptrend line here to monitor over time. Moving average ribbon is still bullishly stacked for now, pinching. Next, moving on to the S&P 500 chart, chart number 13. Here's the daily S&P. A lot of good stuff here, guys. First off, this trend line break on the 14 RSI gave a great sell signal in early August, right about there. Great exit. Didn't get the high, but pretty damn good. And again, late last week, I said to watch this big area around the 43.25-ish area. It was previous big resistance, was broken in June, back tested in June, became support, and we're bouncing off there now. Okay. Also, the 60 stochastic, those of you who've been with us for a while know that the 50% area in uptrends is big support, and you can see it's nearing that 50% area. Next, chart number 14, here's a zoomed in daily view showing the channel. Remember, we stalled at the upper portion of the channel in late July. Nice sell-off, then we lost the 50-day moving average. We got into this demand zone that we've had drawn, and we bounced right off of that on Friday's lows. Okay. And you can also see the 60 stochastic at the bottom, attempting to bounce near that 50% area. Again, is it possible we could just go back to the highs and the fourth wave is done? It's possible. We don't favor it, though. We favor, some sort of lower high, then down again, or a coil, and then up. Okay, that's what we favor. Again, we'll adapt. We'll trade to whatever transpires, but that's what we favor at the moment. Next. Chart number 15, here's the daily KISS trend system. Remember, this exited back in early August. It is flat at the moment. ATR is above. Again, you can see the 60 stochastic below as support at 50%. Next. Chart number 16, here's the 4 time frames we like to follow. On the weekend, Steve pointed out we had DeMark 13 on the daily, DeMark 13, 9 and 13 on 130-minute, and on the half-day chart. So notice we've bounced from those oversold conditions. Now, the ATR is overhead resistance in all these time frames. Next, chart number 17, here's the half-day chart. Again, shows you the same thing as one of the dailies above. We broke the channel. We got into this demand zone, bounced right off the bottom of the demand zone for now. Again, we don't have any MACD divergence here. Okay, that's why I think that this bounce here is not going to go back to the highs. It's eventually going to need a pullback or a retest of the lows. But I'm hoping for a little more upside movement here. Maybe even at least test this broken channel line. Next, chart number 18, there's the 2-hour view with those supply and demand zones. As you know, we went right through that. Basically, again, we bounced off this lower demand zone. Next, chart number 19, here's the 60-minute chart Steve discussed on the weekend. One option he outlaid here was the wave 4 bounce, and then you get another decline in a wave 5 that would put up a better bottom. Again, this could still play out. One thing to note, though, this rally off the lows is the largest bounce in the downtrend that started in late July. The dotted lines represent symmetry. So this does give some higher odds at a higher low on a pullback if we get it right here. Again, what this could be working on is some sort of B wave up, right? B waves are three waves. So if this wedge doesn't form, this could be the wave A of B, then a wave B of B, and then a wave C of B to complete that. And then you come down again. Next, chart 20, here's the daily triple Qs. Again, bouncing off this supply zone for now. By the way, this 351.65 is symmetry based on this, the largest pullback, which was actually December. Again, this pullback exceeded the one in February into March, but we had a larger pullback there of 36 points from the December to late December lows. Okay, remember the bottom was in October, so we did not break symmetry on the bigger picture. Next, chart 21, here's another daily chart. Again, nice bounce. There is a trend line here to monitor. Again, I think we can eventually, if we can clear that, then you have the 50, 20-day moving averages above. And again, you can see, just like on the S&P, the 60 stochastic coming right to this important 50% area. Next, chart 22, there's the half-day chart. Shows you the same thing, trying to bounce off this little demand zone. We did break this little RSI trend line. Next, chart 23, here's the 2-hour chart. This nice steep little channel here. Remember, we lost those support last week. Nice bounce here. Next, chart 24, here's the daily KISS trend system. Again, this also exited there in early August. It is flat at the moment. ATR is above 374.50. Next, chart 25, here's the 4 time frames. Similar to the S&P, again, you had a DeMark 13 on the daily, DeMark 9 on the 130 minutes. So we were very stretched, oversold. Moving average ribbons were very wide. Steve commented about this in the weekend. Again, you can see how wide the ribbons were. Remember, when they get like that, you're due for some reversion to mean action. ATR is resistance on all these time frames. Next, chart 25, Apple. Let's talk about Apple. As you know, Apple has been leading down. It broke symmetry there in early August. And this sets the stage for an eventual lower high wave B. I think eventually it's going to test its 200-day moving average, but likely, hopefully, we started this wave B bounce. You can see we had some RSI divergence here, and wave B bounce could easily take Apple maybe up to this 50-day, 20-day moving averages. Then I think you get another decline into September, and that could be a better bottom. Next, chart 27, here's a 30-minute chart. Remember, it broke this little channel last week. It's now coming back to it, so that is big resistance it needs to clear. Next, chart 28, there's the 2-hour view. Similar view. The positive here is we did have very strong MACD divergence, and I talked about this late last week. So I don't think this just rejects and comes right back down again. I think this could be a nice little trade low at the moment. Next, chart 29, here's the monthly chart of Apple. Notice you had that doji candlestick in July, provided a nice trigger, and Apple so far down over 10, almost 10.5% for August, and you can see the lows tagged the 9-week or the 9-month EMA, bounced off of it for now. You do have a big, on the bigger picture time frame, the concern I have on Apple is look at this big MACD divergence longer term. Could be more of a substantial top on Apple or one developing. Next, chart 30 here is NVIDIA. Huge day on NVIDIA. Definitely looks like more of a fourth wave pullback. Good volume, MACD's recycled. Remember, this reports on Wednesday. Steve's opinion on NVIDIA is that we rally up into earnings, and then maybe on earnings we sell off. We'll see. Next, chart 31, here's IWM. As you know, IWM is just perfectly ping-pong between these coil trend lines, and especially recently, nice sell-off. Now there's a demand zone to watch here for a bounce. Next, chart 32, here's the daily, shows you the same pattern. Again, hope you took profits at the upper trend line. You also had the trend line the sell signal on the RSI trendline break. Notice the IWM bounced right off its 200-day moving average. That would have been a good area to take a little initial position. Okay. Next, chart 33. Here's the 2-hour chart. Again, coming into this demand zone. All right, guys, that does it for the indexes. So far tonight, futures are pretty flat. We'll see how they open tomorrow. Let's move on. Chart 34, here's the VIX. So as you know, the VIX actually closed back inside its Bollinger Bands last Friday. I didn't add an arrow here, but that actually gives a little buy signal for the S&P, and we did get a bounce today on that. Next, just covering a few of these other indicators. Here's the percentage of stocks in the S&P 500 that are above their 20 EMA. Again, back in July, you had a divergence here. It was in the overbought territory. That was a good exit signal. It got pretty oversold last week, down to 15%. Next, chart 36, the NYSI gave a great signal on this trigger. This will be something to watch going forward. Again, your buy trigger you'd have to have a up candle take out the high of a recent candle. So something to watch over time. Next, chart 37. Remember all these advanced decline issues that I discussed late last week were getting oversold below the lower Bollinger Bands. So here's the S&P again. Had been below its lower Bollinger Bands many days. Usually doesn't do it that much before you get a bounce. So again, things were very stretched coming into the day. Chart 38. Here's the advanced decline with the Nasdaq 100. Same deal. It was way below its Bollinger Bands. You can see it came back inside today. Chart 39, here's the advanced decline for the XLK indicator. Same deal. It was way below its bands. Okay, now we've had a nice bounce the last couple days. Moving on to the sectors. Chart 40, here's XLK technology, which I just showed above. Had an RSI divergence here. Nice bounce, trying to regain this trend line here. Again, 50-day and 20-day moving averages are the more important resistance to me above. Next, chart 41, here's the semiconductors. Nice bounce back. Again, your resistance is around that 3650 and that trend line, broken trend line. Next, chart 42, financials. They could not bounce. They're still very weak. The movement in bonds are not helping this area. Still trying to hold its 20-day moving or 200-day moving average for now. Chart 43, here's the banks, same deal. They remain very weak. Chart 44, transports. Remember I showed this late last week, this extended trend line to monitor as support. So far, price is attempting to bounce near there. Chart 45, materials. This is sold off nicely. It's trying to find support near its 200-day moving average. Chart 46, consumer staples. This remains still very weak. There's a little slight RSI divergence here. And chart 47, home builders. Remember I showed this I gave this as a short last week. It had basically a little rounded top, umbrella top, and boom, this gave a great short last week. Was even down today. Make sure to take some profits if you haven't done so. Next, chart 48. Here's the 2-hour chart that I really liked. Again, this was just a beautiful setup. You know, this support had been tagged so many times, looked weak. This triggered late last week for a good sell. Next, chart 49, XLE down. It's still holding its 20-day moving average, but should the market, one thought here is, should the market rally, have this oversold wave be, maybe we see a pullback in the energy space. Chart 49, oil services, same deal. This is, again, looking a little bit toppy. Next, chart 51, there's the weekly. Again, perfect this weekly. Remember, oil services filled the supply zone and it's pulling back the last couple weeks. Eventually, I think it's going to attack this thin zone, but I wanted to see a pullback from there and we're getting it. Next, chart 52, here's ERY. That's the double inverse ETF for energy. Sort of a double bottom here. It's still hanging on. Should the energy space get more of a pullback, this should rally. Next, chart 53, the bullish percent energy index still is not giving a sell signal, but you can see how close this is to this 9 and 20 MA. This could easily give a sell signal any day. It is in the overbought territory. Chart 54, DBC, commodity. Again, so far just chopping around after that good rally out of the wedge in July. Still holding the 200-day moving average for now. Chart 55, crude oil. Little, was up today initially, stalled out. Still looks okay. It's had a heck of a rally from the June lows. Just kind of chopping around now. Chart 56, natural gas. As you know, it's been forming this really long base. It has pulled back from the upper range of the base. I do think this could be an area to look to scale back into some ETF. Chart 57, here's the 15-minute chart of Boyle. You can see so far a three-wave action. Price did retrace about 61.8%. So to me, this does look potentially low risk. Again, I want to see at least break this trend line or something like that. But then I'd put a stop right around that 63.50 area. Next. Chart 58, copper was up slightly today. No changes over in the pattern. Still in the trend lines. Chart 59, DBA. As you know, DBA had a nice correction from July into August. Did bounce off this trend line for now. Down today, though. Next. Chart 60, uranium. Steve showed this in the weekend. It had a really good follow-through rally today on good volume. Looks really good. Chart 61, here's the monthly chart. As you know, I've showed this for the last couple of years. I like this pattern. You got a nice coil forming. Your moving average ribbon had pinched. Everything's set up here for a pretty good long-term rally if this can get going. Next. Chart 62, here's the major uranium stock, CCJ. Nice breakout today, expanding volume. Next, chart 63, Quad U, another uranium. Big breakout of the coil, good volume. So let's see if we can get some follow through on these tomorrow. Next, let's move to bonds and interest rates. So here's the 10-year Treasury yield, and you can see it was up today over 2%. Basically, slightly took out the October highs, or basically testing it. And the market was up to spike this. So that's a positive for the market, but this still looks bullish, guys. To me, you know what this looks like? This could form a cup and handle even. Maybe a pullback here, which would help the market bounce further, but then an eventual breakout and all hell, lets loose. So just something to be aware of. We'll see what happens. Keep an eye on this though. Next. Chart 65, there's the bigger picture weekly view. Again, basically right back to the October highs. Don't buy a house now if you don't have to. Next. Chart 66, TLT 20-year bonds. Again, big gap down. Only thing I'll say here, well, before we get to that, again, you can see it broke this support, rallied, back tested it as resistance. Just absolute textbook. But trend is obviously down strongly, but we do have a gap down. Could form an island bottom if it gets a reversal. Moving average ribbon's very stretched. If we get a bounce in bonds, I think that would help the market bounce. Next. Chart 67, here's the monthly view. Just bigger picture though, I do think that TLT will eventually fill this area. There's a demand zone down here. Notice you can count 5 waves down. See that? Again, that would likely occur on the next sell-off, all right? But it is something to watch longer term. Chart 68, here's high yield corporate, and this was basically flat today, still below that previous trend line support. Next, chart 69, Bitcoin. As you know, this sold off strongly last week. Couldn't really do anything today. Pattern needs a lot of work, still looks very weak. Chart 70, Bito was a way to play it. It was a good short, actually. It is near its 200-day moving average. Next. Chart 71, Mero, one of the major stocks that follow the Bitcoin. Big sell-off since July. Now, there is a demand zone down there that was previous support near the 200-day moving average. That could be an area for it to find support. Next. Chart 72, US dollar. Again, it's rallied up to this resistance, demand, or supply zone. If the dollar can pull back, that would help the market and especially precious metals. Chart 73, there's the weekly. Again, the weekly, It's been up over the last month and a half, rallied right off that 200-week moving average. Next, chart 74, gold. As you know, gold is, we've been monitoring this pattern. We're near the 200-day moving average now. One thing to watch is this ABC. Watch the GDX-GLD ratio here. Gold slightly GDX slightly outperformed gold today, but we need to see more. Next, chart 75, here's the ETF GLD. There is this open gap still. We haven't filled that gap. If on another decline, that would be a target. Next, chart 76, there's the weekly view showing that potential ABC. Again, gold stalled in May right at that triple top resistance there. I do think, though, that this will eventually break out on the next good rally. Next, chart 77, silver, big pop back, testing the broken trend line and 200-day moving average. Chart 78, GDX pulled all the way back, filled that open gap. It is quite oversold here. This is an area where you would expect some sort of rally attempt. We'll see if we get it. Also watch the trend line on the RSI 14. Chart 79, GDX 2-hour view. That coil played out for a nice short. Got oversold, bouncing here. And chart 80, here's the 60-minute chart. Nice clean channel. On Friday, the MACD was curling up here. It looked like it wanted to bounce, and that's what it's done. I wouldn't be surprised to see this rally further, should the market rally further as well. Chart 81, here's GDX with the GDX advanced decline. Again, just like the index, this was buried also below its Bollinger Band, so bounced back a little bit today. Chart 82, here's the bullish percent BPGDM. This went on a sell signal back there in May. It was a great sell signal. And it went on a quick buy and sell signal there in July, August. And that gave a great sell signal as well. Next, chart 83, Newmont. A couple of you guys posted about it today. Newmont's pulled back to this area. By the way, Newmont's the largest component of GDX on a weighting basis. Anyway, it's at the lower trend line here. Could be a lower risk buy with a tight stop if you felt like it. Also watch the trend line on the ratio. Next, following up on trade ideas, chart 84, PHM. Remember, this is a home builder. It was a short in last Wednesday's newsletter. Played out beautifully. Next, chart 85, SLB, Schlumberger, energy stock. Steve discussed this on the weekend. Talked about the stops, moving the stop down again. Here's a potential area to take some profits. Next, chart 86, PSHG. It's a shipping stock, has a lot of cash. Talked about this, a month or two ago. Broke out of that base. It's been moving higher ever since. Chart 87, Oust was a previous long idea. The reason I'm showing it again, guys, is the volume has been very light on this decline, and it's holding the 20 and 50 here. Could be an area where it may want to bounce off of. Chart 88, STLD, showed this last week. Never triggered, but I'm going to keep it here for now, this potential inverse head and shoulder. No volume here at the moment, though. Here's some new setups, guys. Chart 89, TSVT. You got a MACD divergence here, a couple dojis. You could trigger off the high of the doji, put a stop right at the low there. Next, chart 890, NXE, good volume today, broke out. Watching for this for momentum follow through. Chart 91, Rare, here's another one, oversold. MACD divergence, I think it's a pharmaceutical. So another potential low risk, stock off the bottom with divergence. All right, guys, that'll do it. We'll see what happens tomorrow. Have a wonderful evening. See you tomorrow. Take care.